Welcome back to another episode of the Disciplined Trader Collection podcast, brought to you by Bell's Forex AudioWorks, where we transform complexity into clarity and volatility into opportunity. I'm your host, Isabel Maria, a fellow trader who's seen markets move faster than a double espresso on an empty stomach, and today, we're slowing things down a little, because in a world obsessed with speed, algorithmic trades, scalpers chasing ticks, screens flashing every second, I want to talk about the power of patience. Yes, patience. The kind that builds real wealth, long-term investing. Before you roll your eyes and say, Isabel, long-term investing? But I'm a trader. Hear me out. Being a disciplined trader doesn't mean ignoring long-term strategy. In fact, the best traders I know have one thing in common: they think long-term, even when they trade short-term. Let's start with something fundamental. Long-term investing isn't about being passive or boring. It's about compounding, letting your capital and time do the heavy lifting. Albert Einstein famously called compound interest the eighth wonder of the world. He said, "He who understands it, earns it, he who doesn't, pays it." When you hold an asset over years, not minutes, your returns start generating their own returns. That's when magic happens, not from the number of trades you make, but from how long your money stays working for you. Now, there are other perks too. Fewer trades mean fewer fees, and let's be real, overtrading is one of the easiest ways to bleed an account dry. You're also less exposed to the emotional roller coaster of market noise. Long-term investors don't panic when headlines scream market crash. They zoom out, look at the fundamentals, and stay focused on the bigger picture. Let me give you an example. A few years ago, I met two traders, let's call them Alex and Jordan. Both started with 10,000 euros. Alex was the quick-trigger type, constantly chasing short-term setups, scalping, reacting to every piece of news. In a single year, Alex made over 300 trades. His returns? About 4% after fees. Jordan, on the other hand, took a long-term approach. She spent her time researching, looking at company fundamentals, understanding management quality, and identifying competitive advantages. She invested in just 5 stocks with strong balance sheets and held them for 3 years. Her annualized return? Over 12%. The difference wasn't intelligence or market timing. It was patience and a disciplined process. Alex traded noise. Jordan traded value. That's the heart of long-term investing, focusing on quality, not quantity. You're not trying to win every battle, you're trying to win the war, and here's where traders often trip up: they mistake action for progress. They think if they're not trading, they're not learning. But in trading, as in life, sometimes the smartest move is to sit still. To let the probabilities, and your edge, play out. So, how can you apply this long-term mindset in today's fast, data-driven market? Start with fundamentals. Look for intrinsic value, not just price movement. Understand the financial health of the asset you're investing in. Ask yourself, is this company or currency pair fundamentally strong, or just popular right now? Then, diversify. Don't put all your eggs in one asset, or one strategy. A balanced portfolio, across sectors, asset classes, or regions, can protect you when the unexpected happens. And if you want to combine your short-term trading with long-term goals, you can. The key is to separate them. Have one account for trades and another for investments. That way, your trading emotions don't contaminate your long-term positions. Another simple but powerful habit? Reinvest your dividends. It may seem small, but over years, reinvesting those payouts can drastically boost your overall growth. Finally, review, but don't overreact. I like to check my long-term portfolio quarterly. I assess, adjust if necessary, but I don't obsess. Remember, volatility is noise, value is the signal. Now, let's address the elephant in the room: short-term trends. Even as a long-term investor, you can't just ignore what's happening day to day. Markets are dynamic, and being informed helps you understand where risks might lie. But there's a difference between being informed and being reactive. When the market pulls back 10%, the undisciplined trader panics. The disciplined investor looks for opportunity. You don't sell into fear, you use fear to buy quality at a discount. And when it comes to managing risk, consider using hedging instruments. Futures, options, tools that let you protect your downside without abandoning your long-term strategy. Think of it as wearing a seatbelt while driving. You hope you never need it, but you're glad it's there when things get rough. Some traders find value in blending the two worlds. For instance, using short-term trades to generate additional income or to test market conditions, but always within a framework that serves their bigger financial goals. I've personally seen traders use their short-term profits to strengthen their long-term portfolio, reinvesting gains into stable assets like ETFs or dividend stocks. That's a smart move. It's like using sprint profits to fund a marathon. The biggest challenge? Emotional discipline. The long-term investor has to stay calm when markets go wild. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." That's not just wisdom, it's data-backed truth. The market rewards consistency, not impulsivity. So, every time you feel the urge to do something because everyone else is panicking, remember Buffett's words. The patient win. So, let me leave you with this: long-term investing isn't the opposite of trading, it's the evolution of it. It's the mindset that separates speculators from professionals. Whether you're trading currencies, stocks, or crypto, understanding how to think long-term gives you stability, clarity, and confidence. I'd love to hear from you. What's been your experience balancing short-term trading with long-term investing? Have you found it easy to maintain discipline, or do you get caught in the short-term noise? Drop your thoughts in the comments down below, I read every one. Until next time, trade smart, stay patient, and remember, time in the market beats timing the market, every single time.
Thank you for listening to The Disciplined Trader, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading!